In a significant trade in global trade dynamics, China has overtaken the US to become India's largest trading partner in 2025-26, with bilateral trade reaching $151.1 billion and India's trade deficit with Beijing widening to an all-time high of $112.16 billion. Now, Beijing is doubling down on its dominance. China's newly announced 18-point supply chain regulations describe in state media as an effort to prevent security risks in industrial and supply chains, give regulators sweeping authority to investigate multinationals and potentially penalize companies that move manufacturing out of the country. My guest today, John Quelch, is Executive Vice Chancellor of Kunshan University. He has decades of experience and expertise in global trade and China's economy. In this episode, I talk to John about what it means to have China as India's top trading partner, how Beijing plays the long game on trade and tariffs, what to expect from the upcoming Trump-Xi summit, and where the India-China relationship is headed over the next 5 years. It's Thursday, the 7th of May. I'm Anirban Chaudhary. This is the Morning Brief. To put things in perspective, India sells China roughly $19 billion worth of goods. China sales to India $131 billion. Now that's a dependency. China was India's top trading partner from 2013-14 to 2017-18 and again briefly in 2020-2021 before the US held the position for 4 consecutive years. So, what's brought it back? 2 things happened simultaneously. The US retreated and China tightened its grip. On the US side, the answer is largely Russia. In FY24, India's crude oil import bill fell nearly 16%, not because India bought less oil, but because it pivoted massively to cheaper Russian crude, slashing what it paid per barrel. Price is India's overriding concern on energy imports, and US crude is lighter, more expensive, and poorly matched to India's refinery configuration. And then came tariffs. In 2025, the US raised tariffs on Indian goods to as high as 50%, hitting India's export side hard. The numbers followed. China, meanwhile, kept selling India everything it couldn't make itself. Nearly 80% of India's imports from China are concentrated in just 4 product groups: electronics, machinery, organic chemicals, and plastics. Electronics imports from China alone stood at $38 billion in just the first 10 months of last year. Mobile phone components, integrated circuits, laptops, solar cells, lithium-ion batteries. India's own manufacturing boom is being built in large part on Chinese parts. The US sells India oil and aircraft, China sells India everything else. So, what does this mean? 3 things. First, India's growth story and China's export machine are deeply intertwined. Decoupling is hard. Second, heavy reliance on Chinese imports in electronics, pharma APIs, and machinery creates real vulnerability during geopolitical tensions. And third, India's predominant exports to China over the last 5 years have been iron ore, naphtha, shrimps, and castor oil, raw materials against high-tech goods. That is not a partnership of equals. Now, add Beijing's new supply chain rules, sweeping regulations that could penalize companies for moving manufacturing out of China, and the picture gets even more complex. So, how should India read all of this? What is China's long game really? And is the deficit even the right thing to worry about? To get more clarity, I spoke to one of the world's foremost experts on global trade and China's economy, John Quelch. Hi, John. Very warm welcome to the Morning Brief.
Great to be here. Thank you.
All right. We are talking at a very interesting time. This year, China has become the top trading partner for India and replaced US.
Yes. First of all, thank you for having me. We have seen a trade deficit on the part of India vis-a-vis China, about $112 billion on a total trade of $151 billion in the past year. So only around about $20 billion worth of Indian exports to China, and a very significant trade imbalance. This is explicable really in terms of India's need to import many of the components necessary for its higher quality manufacturing enterprises. And China, of course, has become increasingly the global source for mechanical and electrical products. In fact, those products now constitute 63% of all of China's exports. So it's this combination of China has the component parts that Indian manufacturing needs in
John,
order
China
to
plays long
make
games in
finished
its
goods.
trade relationships. What are the lessons that we can learn from there?
Right. China plays a long game in everything, has just inaugurated, of course, its 15th five-year plan. So China is a very systematic country. And when it comes to, let's say, the provocation of a 145% tariff, which is what the United States had running against China at one point, China has a very significant high-quality bureaucracy that includes cost accountants and economists who would have analyzed in great detail what the impact of that would mean for the China economy, and therefore what the penalty should be in response that would be equivalent to the cost inconvenience imposed upon China. So in all of the back and forth with respect to China-US tariff wars, China has, I think, consistently tried to be proportionate and deliberate in its responses rather than bringing emotion into the equation. Perhaps the only time when that did not occur in the past year was when China decided to pull the rare earth card out of its wallet to make sure that the U.S. understood their relative dependency on Chinese rare earths for critical electronic component manufacture.
China has rolled out new trade rules this month, and it has sort of warned of severe penalties if manufacturing bases, companies move their manufacturing bases out of China. How do you see this affecting the China plus one trend that many had said would benefit India?
Well, the China plus one trend is a trend that many countries have attempted to take advantage of. And probably the country that, in a proportionate sense, has been the number one beneficiary so far has been Vietnam. But interestingly, recent calculation indicates that only about 1/10 of the increase in Chinese exports to the U.S. could be attributed to the diversion through Vietnam. So Vietnam has, I think, learned a lot from China in terms of what makes for efficient and low-cost manufacturing while retaining quality standards. They had the advantage of many years ago having Intel of the United States set up chip manufacturing in Vietnam. This is a competitive scenario that we're looking at. Who do you want as your plus one? I myself think that India has, of course, very high potential in many sectors, but at the same time, there are conditions in the Indian environment that both regulatory but also in terms of workforce readiness and capability that can, I think, detract from some of the more positive
But my question was also on
India
China's decision, penalize companies that move out. Does that impact the very concept of China plus one? What do you think?
I think diversification is something that China has embraced in the last 10 years because they have greatly diversified their markets in the sense that they have moved much of the emphasis that used to be placed on the United States to the global South, having got a warning early on in the Trump 1.0 administration. So diversification is something that China understands. And they, of course, understand that strategically, individual companies and countries would wish to diversify away from China and not be dependent on China. But that doesn't mean necessarily that they're not willing to exert leverage that they may be able to exert. And to be honest, I wouldn't worry too much about it. I think China would be perfectly understanding if an Indian company moved to source some of its components outside of China.
What are the three things that you expect from the Trump-Xi meeting on May 14th and 15th?
Well, first of all, I'm very, very hopeful that the meeting will actually occur. And I think that this time, I hope that it does go ahead and take place. Secondly, China are always very reluctant to hold meetings of this nature unless there is a pre-agreed advance agenda and there is a certain number of agreement elements that are already going to be announced, and therefore the meeting can be declared a success by both sides. So there's a tremendous amount of pre-scripting that goes on in the Chinese psyche, but that doesn't necessarily align with the way in which President Trump sometimes operates. But I do believe that the Treasury Secretary of the U.S., Scott Bessent, and his team, including the trade representative, Jameson Greer, will have developed a suite of agreements, sub-agreements, if you like, that may open up certain parts of the China market to U.S. firms, and likewise, maybe on the U.S. side, certain relaxation of investment constraints on Chinese investments in the U.S. So I'm optimistic that all of the behind-the-scenes work that's happened in multiple European cities over the last year between the two sides will actually result in some menu of economic announcements that will make the visit significant enough that it can be called a success.
Last two questions. Do you see China really creeping up on the tech race that the world is fearing it to? I mean, there was DeepSeek. Now there is Manus AI. It just, rejected a deal by Meta, which was worth $2 billion. And this is, of course, just 2 weeks ahead of a meeting between Trump and Xi. How do you see the tech race? And do you see cooperation, competition? How do you see it going forward?
There is no doubt that AI is a significant battleground between the U.S. and China. And in one respect, that level of intense competition is beneficial to the rest of the world in as much as it's driving tremendous investment in innovation, in technology that, if harnessed appropriately, can make people's lives potentially a lot more pleasant over time, and of course increase productivity as well. But collaboration versus competition is definitely a key issue here. And United States does not want to give ground to China in this area. But we have to remember that in many respects, China is the laboratory where high productivity AI applications can occur, because China is the factory now to factories all over the world. It's now dominating the electrical and high-tech manufacturing export markets. And those manufacturing plants, those smart factories, are where a lot of AI productivity applications are being implemented. And so China has the laboratory in its highly competitive domestic market to advance AI applications perhaps in some respects in ways that the US cannot. For example, robotics. Most people will not know that China now produces 85% of all of the robots that are produced in the world. That's a very, very significant advantage, and AI is fueling the continued development of that industry in China.
Got it. And finally, John, 2 or 3 ways in which 5 years out you see the Indo-China trade relations evolving.
So at the moment, cross-border investment between China and India is minimal in both directions. I think India has offered a certain relaxation of its regulations regarding Chinese investment in India. I would say that India, in my experience in China, has very good representation in its diplomatic missions, both in the consulates and in the embassy in Beijing, and assigning high-quality people with some commercial instinct to those roles will be very helpful. When it comes to the trade side of the equation, as I said before, I don't think that the deficit per se is something for India to worry about. China happens to have what India needs at the moment, but that can change over time, and I'm sure there'll be some opportunities for collaboration. Both countries have a very strong interest in hydrogen power and in developing alternative fuel resources, given the current challenges that we're facing. The final point I would make, if I may, Anaban, is, and I've said this previously, India-China bilateral relationship is one of the most important bilateral relationships worldwide, more so at the moment than economically. But if one can imagine collaboration and cooperation between the two great Asian cultures, we're talking about potentially impacting the well-being of almost 3 billion members of the world community. So I think Chinese diplomats and high-level government officials, and the same in India, have the responsibility as well as the opportunity to do much more to harmonize the relationship and try and discover a win-win formula for moving forward.
John, thank you so much for joining us.
All right, thanks.
From a trade
Anaban.
deficit India
Appreciate it.
shouldn't fear to a Trump-Xi meeting that's already been scripted to China owning 85% of the world's robots, the numbers are staggering. But the real story is simpler. 2 ancient civilizations, 3 billion people, and a relationship that, because of valid reasons, is yet to be exploited to its full potential. That's it for today. You were listening to this episode on The Morning Brief. It was produced by me with Rajas Naik and Indranil Bhattacharjee on sound. Keep listening to The Morning Brief wherever you get your podcasts. Stay tuned.